Thank you so much. Just like in the market, we're late to the rally. Our stock is undervalued, so I'm going to start with that. I was late to my own presentation. So how does it work?
There's a clicker, just the big one's advanced. Yeah.
So Monarch Gold, we take the name after the monarchy or the monarch butterfly, any which way you want to look at it. But ultimately, it came from some properties that we own, and we reconstituted the name, and we made a cause for ourselves as well with the monarch butterfly, so which represents the logo. So why do you want to invest in Monarch? Well, our goal is to become 100 to 200,000 ounces a year gold producer. The main focus of the company right now is, of course, the Wasamac Gold Project. It's a very big project that we released the feasibility on last December. It was a positive feasibility, a high return, an NPV of $522 million Canadian at the gate in December 2018. Just to give you an idea, we're probably sitting more near $900 million of NPV as we speak. The rate of return, again, when it came out, was at 24% pre-tax. We're probably sitting more in the low 30s as we speak. The low cost of the project is $550 US. It was done by a firm called BBA, a big engineering firm from Montreal. And it was all based on a US dollar gold of $1,300 US with an exchange rate of 131, which was 1,700 Canadian. We're currently sitting at hovering around 2,000. We want to create continuous valuation in the company. We made several opportunistic acquisition in the last few years. That's how we build a portfolio. And the latest one is the Fayal deposit, which we acquired last month. We've released some very high-grade intersect about a week ago, and we released yesterday a resource estimate on the property. The reason for that acquisition, very simple. We own 2 mills, and the mills need feed, and we have a lot of smaller projects in the vicinity of these 2 mills in order to create cash flow generation as we advance the mother project, Wasamac. We sit on a good financial position, $5 million in cash, $2 million in investment. We have gold inventory as well. Major partners are Alamos Gold with 18%, ECLA, since we bought the Fayal deposit from them, Rob McEwen, Greg Shemendi, Agnico Eagle. We bought some products or properties from them not so long ago, so they're all sitting good shareholders of Monarch. We offer a tremendous attractive value. I'm sure you heard that before, but now more than ever, we're sitting at about $18 per ounce underground. The current valuation of some of our peers are more in the 30 to 50 range. And the market cap of the company is about $66 million today at a price of 25 cents per share. Okay, there you go. This one's the lead. So we have a map. I love this map because it gives you a better picture of what Monarch is all about. So when you look at the map, it's basically 300 square kilometers of gold property in one of the prime real estate for gold in Canada. All the properties you see in yellow are the property that we own. And combined in this 300 square kilometers of properties, we sit on 4.4 million ounces, 3.3 M&I category, and 1 million of inferred category. So this is the portfolio of Monarch in one image. You see the 2 blue square in the middle. Those are the 2 mills we own. The one on the right, on your left, is the ex-Barrick gold mill, the Camflo mill. And the one on the right is the Beacon Gold Mill. We both acquired these mills in a depressed environment about 4 years ago. And that put us in a very good position with all the exploration that has been happening and is happening as we speak in Abitibi. All these projects at one moment and another give us a call to see down the road where our mills could be used and how could they do some toll milling. There's no other mills that are Primary focus could be toll milling like the 2 mills that we own. Most of the other projects are almost at full capacity. So it gives you a very good image in one picture. So let's jump into Wasamac. I only have 8 minutes left, so it's going to go fast. We have a big picture here, shows you the mining plan on the right. These numbers come out all of the feasibility study. Again, 140,000 ounces a year for 11 years. Good rate of return, 3.6 years payback, things that people are looking for. Very low cost of production, 550 US per ounce. The capex, $460 million. We feel that the pressure for the last few months and year since the release of the feasibility has been due to the fact that the capex is expensive for a small company of our size. But rest assured, we've had a full data room available, and we're talking to a lot of the main producer in the region. We've had several discussions. Some went away, some came back. And obviously, in the last 90 days, the phone rang again, and we're starting to have a little bit more serious conversation. It is our intention to look at the possibility to start the permitting this fall. We will come back to the market to announce that when all the things are lined up properly. To give you an idea, that 460 million could drop by a half if we didn't have to build a mill or the tailing facility. The mill that we're building for this project is a 6,000 tons per day mill. Thus the reason we can't use our current mill, which combined only have a capacity of 2,000 tons per day. We compare our project to 2 other projects in the region, the Gold X from Agnico Eagle. You could see for yourself, this presentation is available online, and anywhere if you want to download, you can look at it. But you see the comparison between Agnico, Alamos Gold, who happens to have 18% of Monarch, and the Wasamac project. And all these 3 projects have a similarity. They're bulk mining, underground, lower type of grade, but it's not like the typical Abitibi narrow vein, high grade vein. We're looking at thickness of 50 to 70 meters, 2.7 grams, very small dilution, and we take a lot to surface every day to conclude the 140,000 ounces a year. So it's been done. The technology used at Wasamac is the Railveyor technology, which is a bit like a roller coaster. We bring back the ore to surface. It's all directed from surface. There's no human factor involved. The Railveyor goes down to the mining stopes, so there's a lot less manipulation. It's all fully electric. There's no diesel involved. So it's a new way to evolve, and Goldex is making very a good success of this technology at Goldex presently. We visited, and so did the engineers who did the feasibility. So we're very comfortable with that technology. This is a map quickly that shows you all the milling facility along the railroad system. The Wasamac project has one advantage. We built a feasibility mill at the railroad station. And the reason we did that is we wanted to have the option to put everything on a train and send it somewhere else, which is feasible. We've talked to the Ontario Northland Company. We know we could do it. We could bring it to Timmins for about $5 a ton. And we also like the idea that some of these mills are coming to the end of life, of mine life. So there will be some very active discussion. We've spoken to everybody on that chart. When you go online, you can zoom in and see the capacity of every mill and understand better all the options are there. But just to name a few, Agnico Eagle, Eldorado, IM Gold, Glencore, Goldcorp Newmont, McEwen Mining, Kirkland Lake, they all have mills within the vicinity of that train track. So that makes our project very attractive. So these are the profile of the mining. I'll skip through that. You can always go back and look for yourself. The sensitivity analysis, I brushed over it at the beginning. You know that we're sitting probably more like $800 million of NPV right now compared to the 525 off the gate when we did publish the feasibility. People thought we were aggressive with a $1,700 Canadian gold. We're happy that the market proved us wrong or right. So this is to give you a better idea of how the progress improves with the price of gold and develops a very good optionality on gold. We have a strong asset base. We have 2 mills. The rebuild value and the permitting factor of those 2 mills probably represent the market cap of the company. So when you buy shares in Monarch or you look at an investment proposal to come with us, just think in your mind that just as far as infrastructure, it's probably worth the current market capitalization of the company. So in a raising gold market and where projects could come and process through our mills, you can realize that having all these infrastructure will be beneficial for us on the long run. We have 6 advanced projects. Of course, the Wasamac mentioned earlier, but we have the Cronor Gold, which is a fully permitted mine ready to go. It sits on the eastern part of Val-d'Or. I didn't talk too much about that, but it's in the presentation. The Fayal deposit we just acquired, which is open pitable. Mackenzie Swanson, same thing, 200,000 ounces open pitable system that sits in the vicinity of our project. And finally, last but not least, we put the Beaufort mine in care and maintenance on June 30th. We can foresee the 90 days that followed, but we did that as a prudent move to finalize some details, hopefully this fall with Wasamac. And we're on track to try to find a exploration partner for Beaufort, because we think with a small amount of money, we could restart the mine in the spring for about a 4-year mine life. So Cronor property, I will let you go and see for yourself. It's basically a very high-grade deposit, 250,000 ounces, 9-gram material. We're very anxious about the packages offer. It sits on 150 square kilometers of land package, and the Cronor Gold, it sits on about a 1 square kilometer in the middle. When Rob McEwen wrote a check to enter an investment in Monarch, he said to me, this Cronor mine, I don't believe this is the mine. I think maybe the mine is below on the side or 500 meters away. You need to explore that 150 square kilometers package. And we agree with him. The only problem is we were in a depressed environment, and it was tough to dilute the company as we went ahead and bought ounces, including the 2 million ounces of Wasamac that we acquired, and we didn't drill for it. So the last 5 years was more an environment to acquire ounces than try to discover ounces. That was my motto, and I think we proved so far that we had a beautiful basket of property. So in closing, we got 45 seconds. We have about 240 million shares outstanding. We have, which represent the market cap. We have a great management team with great experience. Same thing with the board. Just remember one thing, when you think about the Cadillac fault right now, and you think of the rising price of gold, you have to just picture for 1 second, we are the only multi-million ounces deposit on the Cadillac fault at feasibility stage. Everything else is being mined out as we speak, or not yet discovered, or not yet feasibility stage. So we are right there at the startup line to do a lot of advancement in a beautiful project in an area that everybody knows that produced over 150 million ounces in the last century. Thank you so much.
Perfect. Thank you, Jean-Marc.